Welcome to the People's Economy Podcast, the only podcast where we keep it all the way real. Our mission here is to, give you some information you can take away, maybe improve yourself. So, Dodge, how things been going in when you've been researching stocks and things like that? What have you found in your research? Where have you stumbled? Like, what are you thinking right now about your
Well,
investment strategies?
basically, I'm interested in seeing how the gap is going to decrease with the money that's putting into the stock market, like the wealthy and the everyday person. How
Yeah,
that gap could, how that bridge, how that could come together in the short future. Who knows where that could be headed? You know what I'm saying?
yeah, of course. I mean, the stock market is way off what the economy is doing. That's what they say. Wall Street and Main Street are on way two different sides of the spectrum right now. You're looking for more of like something more aligned, like a stronger economy overall, and that's the stock market, right?
Yeah, something that's strong in the stock market that could go along with the economy that could give it that boost. That's I think that's where you gotta play your focus, and it's good to have money on stocks that are going up for now, but you got to think you know way into the future.
But do you think you should? How diversified should you be right now in terms of where you invest your money? Should
I
you have a
mean,
lot? How many streams you think? Like, you know what I mean? How many things should you be invested in?
I don't know because these are times we never seen before, 2020. So if you put your money in, like the old school, what the stockbrokers do and the portfolio managers, they may buy like oil and finances, but your money's probably going to be negative on that or flat. I would go heavy in more future companies like technology type companies.
Mm, right, right. Which is what we've been kind of talking about for a while, for a while on here. Even though the forecast has said the opposite of what we're saying, tech is definitely where it's going. There's no
So
other choice.
how can we, like, us as everyday people bridge the gap with the wealthy in knowing more about what businesses to invest in besides doing research? And should we, like, what parts of the stories that are not being said should we look into, or is there any way to
Probably.
really do that if you don't rub shoulders with the right people,
Yeah,
right?
I mean, you see like CNBC like last month, a couple of weeks ago, we're yelling big tech. We don't know if it's going to be if it's going to go down. If it's on bubble. But if you follow the People's Economy podcast, we actually said we would bet on tech, and
Yep.
we were right there. CNBC was wrong. I'm just saying. We
That's
call
true.
that. We said it's not a bubble. We put our money in tech. A few weeks later, I mean, you see Apple hits a $2 trillion market cap right after CNBC was like, "Oh, we don't know about Apple's evaluation," and we actually
Right.
mentioned Apple on our show on almost every episode. We said
That's true.
Apple. Apple's a good stock. Now it has $2 trillion. So, see the type of things technology is doing.
So all in all, it
Right.
wasn't a bad thing what the president did with the reform or whatever you want to call it.
I mean, are you talking about like making a Microsoft buy TikTok and things like that?
Right. Like getting more, it was probably in the playbook anyway for him, because like that was part of the whole way it was going anyway. Or
Hey, what the hell are you talking about?
way the business is getting done
I mean, I'll tell
with
you one thing.
capitalism.
I'll tell you one thing. If Microsoft does acquire TikTok, you better buy that Microsoft stock before they acquire TikTok.
Yeah,
So
that's true.
right there, you're giving me insight that I was trying to, like, say how we could do that as regular investors. Just being hip, just being more hip to what businesses are merging with other businesses. That's always what it's been, I guess.
I mean, that's kind of new probably for people to follow
No,
it. I
yeah,
don't think people follow
that's
that.
not new, but
But
some
now
people are not that savvy when it comes to things like that.
but more people probably are now. So now is the time for technology to, like how much do you think technology has to market itself? You know what I'm saying?
It's already marketed. It's
Right.
already
That's what
like
I'm
our way of
saying.
life. Yeah.
Right. But without us knowing though. So now in the shift, in this new shift of the economy, it's ready to go. Like it's built and packaged ready. Technology is built, packaged, and ready to go. So they're ready. They're ready ahead of the game. They're ready ahead of the game. Technology, that whole
Yeah.
sphere.
Well, it's funny you say that because like I just saying maybe you have to rub shoulders, but because of technology, you don't really have to rub shoulders. You can actually, because of these platforms that we're offered now, nobody was ever offered. We can do research on these companies. We don't have to rub shoulders. We're in a gatekeeper. You can do your own research, create your own portfolio. All the knowledge is at our fingertips. You can even pay $20 a month to get like the whole Bloomberg terminal on your computer. I
Right.
mean, so you just got to educate yourself.
Especially now. Especially now. Because they mention all the mergers. Yeah, I usually hear about it, and it doesn't take much to know. You just got to do, like you say, you just got to do your extra research onto what that might mean for you, because that company's where it's at.
Maybe, Dad, you can start like a Fidelity account, and when you join the account, you get news on those stocks. You can start there. You don't have to buy anything. Stocks you look up, the algorithms will pull up articles on those stocks. You can start there with information.
Right.
Yeah. No, that's definitely true. That's definitely true.
I mean, I gave you how many stocks I gave you guys in the group chat. I gave you a handful that
everything.
Some cheap ones too.
That's what I'm saying. Some of them I did get. Tesla was one I should have got, and that one's I still can though. Probably still can. Tesla's one. That's definitely one. And should have known. Should have known too.
So now that everything is up, it's a good time to be an investor, right? To even start, because everything
probably always
is
a good
up,
time.
right?
It's probably always a good time.
You made a good point because it's like we kind of got out of the bear market today. Like we're like pretty much hitting new highs that we've hit over the last couple of years and then went down. So yeah, it is considered a breakthrough. It could be a bull market from here. We could get a big run on stocks. It's probably not the worst time to get in. You might want to buy it on the day that the market dips.
Right. That's when you want to come into the game. But it's never probably a bad time to just at least educate yourself on how you want to enter it. You know what I'm saying? That's probably where you want to spend the most time. Figure out what your plan is going to be, and then adjust your plan as you go, because you're definitely going to have to adjust plan. That's the name of the game. But how much do you think? And maybe it could be brief, but how much do you think Bitcoin factors into those diversifying your investments? Do you think Bitcoin's something is that going to stall out, or do you think that's something that'll grow into the future?
I think like.
You want to take a dodge?
No, I was gonna say I think any way you look into investing in stocks, you got to look into the company that's gonna back the Bitcoin. So we gotta see.
But it's not. That's the thing, though. It's not
Bitcoin,
right. That is the problem with Bitcoin. It's not regulated by any company. It's just.
So I guess that's what we gotta wait and see if
it's not backed.
do.
It's not backed by anything. It's not backed by. That's where it's high risk, high reward kind of. It's a high risk, high reward kind of thing.
But it is showing some way. It's almost considered like digital gold for millennials, like the older generation we talked about might buy gold to diversify. The young generation probably goes to crypto to diversify their portfolio. Right.
You're definitely right. At least have a good portion of it. It might not be the majority of it, but you should have a look. And you can see how they've how like the Bitcoin platforms have sort of either merged with other companies or they're becoming kind of bigger than what they were a few years ago. You had to like download the crypto wallet and now you just get an app, or like sometimes with your bank might be connected to an app where you get those type of signs too, tell you that Bitcoin is definitely propositioning itself to be around for a minute.
Yeah, being that one the subject of diversifying too, I would start like a foundational portfolio. Maybe where you pick like some big tech stock companies, some big retail like Costco, Lowe's, Home Depot, some some staple type companies like Pfizer, Procter and Gamble, things like that. Then you start that portfolio and maybe like put some dividend stocks in there, and then you take some money if you want some side money, put it in crypto, and then you have some money you can play with on some more high risk plays where you might be able to make a quick 100% on your money and things like that.
Right.
Diversify like that, and maybe like some gold ETFs are great way to diversify too. Vanguard ETFs or spiders, anything like that is a great way for you to start too, Dodge. If you want to start, I mean, it's a slow growth. You're not going to get like a big growth stock, but you can get ETFs and diversify your opening portfolio like that.
That could be an option, definitely.
And that could be just a way to show. I think you just got to be inside you just got to be in the game. You got to see yourself in the game sometimes. That's a good way. Even if you are is not making a lot of money at first, you learn why it's not making a lot of money, and then you'll be able to shift. You know what I'm saying? And then you shift with that. That's what it's about. But just get your entry point into it. That's the hardest part. You got to jump in.
But if you want to start really simple, you can probably find a crypto ETF, a gold ETF, a silver ETF, S&P 500 ETF, and just start there real simple.
Right.
Real basic and diversified that quick.
Right.
Maybe off camera you could go into depth more about what that entails.
Yeah, definitely.
Yeah, the ETFs, because that's important.
In ETFs, It might be like, let's just say you buy a big tech ETF, it'll probably have like Facebook, Google, Apple, everything in one fund, and you invest in that fund.
Right.
It's almost like mutual funds. The idea of mutual funds, you can buy these like stocks.
I was gonna say, what do you think about this? Maybe this is off topic too, but as far as investments, right, and in, let's say, in the real estate, what do you think about how will like places like malls and things like that have to adapt, you think, to respond to the new way people shop in a new economy?
That's a funny question. It lands right on tech. Amazon's buying up all the fulfillment centers.
Okay.
They buying JCPenney's and Sears. That's kind of an exaggeration. I don't know. I mean,
maybe though.
I think commercial real estate, they might sell a lot of it to Amazon because Amazon has all that money, all that cash on stash. Because they put in real estate, they don't got to pay taxes. So they're going to buy up a lot of the malls, I think.
Right.
Especially in prime locations, close to highways, close to 95, things like that.
Amazon might be the bailout for a lot of places if you think about it. If they just, because fulfillment centers that is becoming a bigger thing now for like companies. They're just buying stuff where it's like storage. You could just have stuff on deck just in case, I got to keep the inventory or just run through all my inventory. That's kind of the way malls and retail is going in general. So fulfillment centers actually make sense. And JCPenney, think about it, JCPenney at like the end of the mall, that's a big space. That's a lot of space. You know what I'm saying? So, and malls I think will be probably more entertainment stuff when they do come back. Probably less shopping, probably more entertainment in the mall. Like if you think of like Palisades, like just how they got the jungle gym and, it'll be more of that, probably more restaurant, more eating when we could do that. I think it'll adapt that way. But tech will definitely be involved in that. Tech will definitely be involved because they're going to probably have to redo the technology systems of all the malls now. That probably has to change too.
Yeah, and who else could do that quicker and better than Amazon?
Right. Amazon's in a great spot right now. They've done great over this whole time.
It would actually be genius if they buy JCPenney and Sears. They would just have all their distributors at hand too, so they just have crazy more inventory. Like
right.
Pennies and Sears inventory online. I mean, it's kind of genius.
Right. It's not kind of. It's definitely genius. That's the what that. I'm sure they're probably planning something like that. Especially because I don't think that their delivery service took off as much as they thought it was going to do. But it don't matter if they got the fulfillment centers and your distributors are all right there. It won't matter.
Mm.
Your costs are still low.
So they're getting those companies for a good deal, right?
Yeah.
They might have pushed a lot out. Put it this way, I think you have leverage. I think you got leverage right now if you're trying to open a business. I think you have
They
leverage.
definitely think so.
Yeah, because
Even as a
they want
small
people. They
business,
want people. They want people in there. They want people to fulfill your shop.
the banks want you to open up the businesses too, right? So they're fast to give you more credit.
It's going to essentially put it this way in the housing market and like trying to get an apartment residential. A lot of them have even lowered their like what they're looking for as far as the standards of what you need, the information you need to initially get into an apartment. You like no credit check, just show you have like this amount like you could pay, so you have leverage. So I don't see why that can't translate to business if you want to.
So if you're small,
hold on, one of those empty places in Manhattan now that cost. Think about the storage places, like one of those closed down storage places in Manhattan. How much of a fulfillment center that could be. That's right
So
there.
even-
And you're on the water. Manhattan would be Amazon at that point. You're on the water. You got your distribution coming in.
At this
Killing
point, just getting a piece of real estate, even if you're not really living on it per se or doing anything with it, would be
That's
a good
always good.
It would be a good investment, is just to have, right?
That's
You would
always
say
good.
at this point,
Any
as an investor.
Yeah,
Any point.
that's probably the most solid place you can put your money right now in real estate.
Yeah.
100%. Real estate is where it's at. If you own something, you're good. You're good. You're not going backwards. You're gonna have to, because that's the challenge though. You got to make it. They're gonna have to make the shift for more business minded market. It's gonna have to be a more business tech savvy market. That's not your old school market. That's not the old school. This was almost a shift. That's really what it was. It was like putting an update in your phone right now. Like this is the update.
What we're talking about is the shift, right?
Yeah,
Like
yeah. How it is now. More technology based.
Not really what the bank is getting off of you. It's more what they could give you. You know, like they're not trying to get more off of you now. It might be, we got the leverage as the people.
I mean, it's good you mentioned the bank, because the reason why the economy and tech's going to be safe, because 0% interest rates, they can get the loans with no interest, and they can grow their business, pay their money, and put the profit, keep the profit interest free. So companies are going to expand right now. Obviously, as the stock market is staying up because of the interest rates being zero, and banks giving money like that, loans out.
Right.
Yeah.
And grow businesses.
Right. Pretty much. It's still leverage, but I guess in a different way.
So right now, if your credit is bad, it'll be a good thing to turn it around, right? Like concentrate more on it if you wasn't in the past.
Yeah, because like you talk about diversification, real estate, that probably is the way to diversify your portfolio. The most solid, and you need good credit to buy a piece of real estate.
Right.
So you have decent credit, at least 700, 680.
Yeah, I would say definitely shoot for 700. 700, you pretty much go golden at 700. Pretty much get especially now, interest rates is ridiculously low right now. So real estate's always good. I think now is probably one of the greatest times to invest in real estate. Probably ever. There's gonna be a lot of wealth made off real estate in this time. I bet you. It's not going anywhere.
How would you like know what you could afford before you make the purchase? Like how would you school one to prioritize that?
You would go sit down with a loan officer, a mortgage banker, a mortgage broker, and they will run your credit and your income.
pretty much.
Yeah, you could see how much you could get, how much you could afford a month or however, right?
Yes, they can pre-approve with that information. They can pre-approve you right there in like 15, 20 minutes.
So you think like at this point in time when investing, that's more as a to get ahead tool rather than a last resort tool?
Yeah, that's a great question. Yeah, you gotta invest. If you just consume, you're not you're only buying liabilities. You're not buying no assets. You gotta buy
Yeah, you gotta buy assets. Yeah,
not just consume liabilities.
yeah.
That's what we. That's the problem though. People consume, but I think with the as far as the when you said you want to know how can you afford something, I think the basic rule of afford, like being able to buy something versus being able to afford something is two different things. So if you want something that's $200 and you have $200 in the bank, you could buy it, but you can't afford it because you
Yeah,
won't have anything left after. Now, when you have that same thing is $200, now you have $400 in the bank. Now you can afford it and buy it. You got both because I still have $200 left in the bank. So that's like a basic way
but
to think of
but the banks
buying
also
versus.
look. Yeah, go ahead.
You know what I'm saying? I was just
Yeah,
saying
no.
that's a basic way.
But
Very simple.
the banks also look at what you have under your name as well, right?
They
So
do.
that plays a part.
Yeah, that's why they check your your income.
Established credit, right?
Yeah, when you want to go pre-approved, you go get pre-approved for a mortgage. They're gonna check your income.
But of
Debt,
course, like
check the debt. The debt, so of course, it matters what you owe, how much you owe, compared to how much you bring in monthly.
but a property is to get a property is different than getting a car or anything like that. It's more inclined, right?
Yes, of course. I mean, you can walk in a car dealership, get your credit ran, and get a car that day. Real estate in New York is probably going to take you
Months.
30 days, months, 90
It'll be
days.
months. It's gonna be months just because it's New York. Just because it's New York, you got like a. It's gonna be months just because it's New York. But you'll get it. You'll get it. But you just got to be diligent on it. But it's great to have. There's never wrong to have a property. It's never wrong to have, especially now if you could get it at a good rate. If you can afford it, it's not a bad thing. Not going anywhere. They're not making no more land. It is what it is.
But you don't have to invest in New York. You can invest any place.
Yeah, anywhere. Yeah, you can. You can go anywhere. It's definitely cheaper than New York, for sure. For sure, it's definitely way cheaper than New York. But New York's a good model right now of the future and what's possible to happen. It's a good model of what could be. Because I think as we talk about Apple's going to have a bit. I think Apple will end up having an even larger influence in the Big Apple than it does right now. You know, I think Apple is going to grow. Amazon, we said we know we already see kind of where Amazon their blueprint is already kind of laid out. Amazon, it's all like laid out for them. Amazon just has to increase their like footprint in the New York market probably a little more, only because if they still want it to be the capital, somebody's gonna have to build up New York again as far as the economy. Maybe Apple will do it. Maybe they'll take that challenge.
I really feel like that's a whole topic that we could talk about on another episode.
What
Amazon,
Apple?
the Apple Amazon merger to New York, like just
Definitely.
the way it could get, how big it could get, you know,
Big Apple.
from right now. Yeah,
They already have like the branding's already there for them, like just the Apple on the in like Times Square. You see it, you know how it is. They'll just have
Shea
that.
Stadium.
Yeah, Shea Stadium.
The logo Apple comes up now instead.
It's just their logo Apple now. Exactly. They're like set up. Their branding is already here. It's already set up. It probably always was meant to be that. It's just Big Apple. So just Apple, but they'll be involved. They'll be involved. They'll have to be because they'll have to be.
These times you see like how Apple Pay is like.
Right.
It's touchless.
Right.
Coming out.
That's a fact. And if you're a company, you should be looking into that heavily to do the contactless. That's what people want to do. That's what people want to do, you know,
You're
and that's
seeing-
easier for everybody.
You're seeing more like major like locations having Apple Pay on the register and things now.
For sure, and I'm sure a lot of them just changed over this last couple months. I'm sure a lot of that has changed, so they've increased with that technology alone. They've increased because you could do that at the subway too now. You don't need a Metro card. You could just have your debit card and scan it or whatever and go right through. So they're getting rid of all that. They're trying to get rid of. They want everything to be contactless and everything. The infrastructure is starting to be set up for that. Definitely in most places. I mean, there's more. I think there's malls or places where they only take. There's like no cash. You can't even do cash. Has to be card, which is crazy. But maybe that's probably where we're going. Probably maybe.
Yeah, there's a stock called Square. It went from like
Right.
$30 to over $100-something. It's actually during these times actually fintech is actually it's like a cash app like you pay.
Okay.
That's,
This is financial technology.
I think that's where really we got to pay attention to is the technology and the banking
Yeah, financial
when
technology.
it comes down to it.
Financial technology. You're right. Financial technology is definitely where the future is at. Literally, that's literally where the future is at. Financial.
You want to
technology.
talk about Bitcoin and everything of that nature. That's where you got to look into.
Apple Pay, Tencent, a Chinese company, has it for China. Alibaba probably has one.
So if all that merges together in one monopoly, then that could be the backing of
It probably won't
crypto.
happen.
The crypto. That's really how it would even try to even make sense. No.
What, crypto? What do you mean?
Like bringing crypto into actual like a fluid currency.
Yeah.
Well,
Well, like you could just go to the store, buy a T-shirt in Macy's with crypto.
Yeah, if all those companies merge together, I figured.
I mean,
that
would be crazy if all those companies. First of all, if Amazon and Apple merge together, they run the world. They run everyone.
That would be even faster. Yeah, I know
Probably
that.
won't. I doubt that. I don't think that'll happen.
the two
But
competitive against each
yeah,
other, right?
yeah, that's not gonna
Like
happen.
egos, right? Like
Yeah, they're not gonna all merge. They're not gonna all merge together. There'll always be competition. I'm sure wants to be able to say we're the best, and I'm sure Apple wants to be able to say we're the best at this. That's just how that drives the market. Doesn't that drive prices and all that? That drives it.
yeah, because they're racing neck and neck on technology. Who can come up with things first?
Right. Apple just has the good. It's just a home brand name now. So whatever product they put out, people are going to be drawn probably more to that than an Amazon product, because Amazon has their own products, and they probably will expand that technology product stuff more, I'm sure. But they got to Cat's got to buy more Amazon Echoes or whatever that thing is called, the Alexas. Probably got to buy more of that and then see what it is. I'm sure they're trying to expand into more Amazon phone, all that's probably trying to.